This is an update and technical analysis on Spider, the largest component to the S&P 500, here off the 5-minute interval, the 0-day to expiration day trading strategy guide for tomorrow, Friday, March 24th, 2023. And in my previous video, we were trading spot price 398.91. I had created the video on the 21st of March where I had mentioned we had that confirmed divergent high, negative and bearish divergences confirmed on the RSI, unconfirmed to the oscillator moving average convergence. But over time, just completely to watch out for that key inflection point, coinciding with the reactionary high primary trend line off the 10th of March. Reactionary highs there, especially if it coincided amongst that 423 daily interval resistance. It would be an objective day trading 0-day to expiration short trade setup, especially for a move down, at least on a flexion point right back to that minor uptrend line, coinciding with the 397.18 price support there. And here was the update here. We ended up putting that divergent high, and really what was more so significant is we ended up opening up the day, putting in an additional divergent high, and then it had that key extension, came right back up. We ended up opening it up amongst that key primary reactionary high trend line, coinciding with that 423 price resistance up above, offering an objective short trade entry. That was good for 60 basis points in gains. Came right back down. We ended up darn near close to that 397.18. Bounced right up, ended up into the FOMC presser here. Got rejected amongst that key inflection point. And then right up here, we ended up putting in a stronger and bigger divergent high with negative and or bearish divergences, really on all 4 momentum indicators. And right to the button right there, hit my 402.63 price resistance while knocking right amongst my key 402.63 price resistance, coinciding with this huge, steep, massive, big divergent high we put in, constructing and establishing negative and bearish divergences amongst all 3 momentum indicators here. A huge, big, huge divergence right amongst that key level simultaneously. A Senate hearing with the Secretary of the United States Treasury, Janet Yellen, considered not guaranteeing all bank deposits, and talk about charts manufacturing the headlines, completely caved in, stop losses, stops, margin calls, big waves of selling, completely snapped that 423 price support, bounced amongst my key 396.23 price support, ends up counter trend rallying right amongst my key minor uptrend line there off those reactionary lows, coinciding with the 399.33 price resistance, knocks it and floors it just hard, massive selling right into the close there. And just never look back. That was good for a 2.59%. Call it a crash as far as option and or day trading goes. That was a congrats to anybody who ended up catching that huge swift move to the downside for a big profitable trade there in a single day. We ended up opening up here. We ended up bouncing amongst my 392.36 price support. Really the next day completely gapped up, kind of back tested this key functioning 396.23 price support here. Ran it right up into my key 399.33 price resistance. Once again, that was good for a 1.7% in gains, offering a key objective short trade entry. Again, really to the bid and button here. Call it a 10 basis points off 10 basis point stop loss. Never look back. Sort of hugged that key resistance level. Bounced off that 397.18 price support. Ran right up to that 398.06 price resistance, and it never looked back here. Kind of bounced right amongst it again, back tested it again, back tested that 396.23 price resistance once again, while opening up, back tested it once again, offering an additional objective short trade entry, if not add on to your existing position, and hard selling all the way down. That was good for a 2.2% crash in options trading there. Ended up rallying right amongst this key inflection point, sort of got rejected and kind of zigzagged and pretty much big counter trend rallies and consolidation throughout that entire close, and ended up backtesting that 55-minute moving average to the button there and closed up. So we'll see what happens. I'll keep you updated if I see any more certificates there. Great profitable trades back-to-back days, and this is exactly what I see now. We do have oscillator hidden positive divergence only on one indicator. Still needs strength and seeing some more momentum indicator renewed life there, and some of the momentum indicators below. But we have this primary uptrend line here off the 13th reactionary lows of March. Big inflection point, in my opinion, the biggest inflection point that all traders and or algorithms machines will be watching very closely here. A lot of new Fibs key retracements levels. We have the 618, 394.11 price resistance up above. Big inflection point right here at that 390.85, which will coincide with the primary uptrend line. Bull traders, dip buyers, they want to defend this key inflection point at all costs, really. That's going to be a key inflection point to watch. Once taken out, short sellers, bear traders, they want to see a complete breakdown and challenge that 398, 389.88 daily support level there. And then we have the 388.92, call it a, I'm sorry, yeah, 382 fibs retracement, key level to watch. I think it's pretty big support there. That's going to really define that next trend change. If we get that breakdown sell signal, once we get that breakdown sell signal, that's going to be a key inflection point to watch where bull traders, dip buyers, they want to hold that key inflection point at all cost. Maybe setting up for a counter trend rally where short traders want to see a complete rejection amongst that key inflection point there. Key levels to watch: 387.39 price support, and ultimately this 385.77, 236 fibs retracement. Big support there amongst the 5-minute interval, and then ultimately that 385.36 price support. So we'll see what happens. I like a long trade setup right here amongst this dual and or triple line of support. As far as the resistance goes, not a whole lot of resistance. Big resistance is that 618 fibs retracement. If we ended up opening up right here, I would suspect it as an aggressive short trade entry there off that 618 fibs retracement. But I really do like if we end up rallying right amongst this key inflection point right here, which is the 786 fibs retracement at 397.78 price resistance. I'd like something like that, or maybe even the 397.23 price support, and then ultimately, of course, still maintaining the 423 price support amongst that key daily interval level for short trade days setup. We make no mistake about it. We are in a near-term uptrend, based upon this primary uptrend line here off the 13th reactionary lows there. But again, anything could happen. You want to see this trend line break for any short sellers to start piling in. That'll be a key inflection point. Make no mistake about that. But you want to see, especially if we start catching a bid tomorrow right out into the open, you've already renewed, so you will be renewing a lot more life in these momentum indicators. Watch for a break below for a short trade setup. If not, some of these key inflection points. Plan the trade, trade the plan.